Hello, hello. Okay, that is not, I don't know why I'm coming through two computers. Give me 1 second. All right, hello, everyone. Let me know if there's still an echo happening. Good morning, this is Kathy, and welcome everyone to our Caffeinated Market Buzz. I'm doing a sound check here. Are you hearing double sound? Is the sound okay? I believe your screen should be showing my heat map. That should be fine. Let me know what's coming through. And most importantly, whether my sound is coming through properly, because I was hearing an echo. So talk to me, say hello, good morning. Let me know. No one's talking right now, so I'm assuming that maybe it's not working so well. I see myself through. Okay, no echo. Thank you so much, Mohammed. And welcome, first timer. Today we're going to talk about so much. I'm sure there's going to be quite a bit that you take out of today. Because it is truly a very, very busy week in the markets, and we have so much to talk about. We have a lot going on, and we will get started in just a second. For kids fun stuff, you said you recently joined our Discord and there are 5 friend requests from Kathy. None of them are real. My rule of thumb is that I will never, ever direct message you over Discord, WhatsApp, WeChat, Telegram, Facebook, anything. Anyone using my face, my name, contacting you, trying to get you, even just saying hello, or trying to get you to deposit funds specifically is not me. That is my hard set rule. I love you all, but I will not, nor do I have the time to be direct messaging you. So unfortunately, I can't really do much about these scammers. I've tried my best, but they're from all over the world. And so there's not one specific jurisdiction. So, they could be coming from anywhere. All right. So we have a lot going on. Good morning from Australia, Taiwan. I know it's very late in Australia, but I've got some really interesting things to say. So I was sure it will be worth your time. So this is an incredibly busy week in the financial markets. We've got the non-farm payrolls report, ISMs, we have the ECB meeting, we have the Bank of Canada meeting, we have GDP numbers from Australia, we already had some PMIs from China. So there are a lot of event risks on this week's calendar. There's a lot to pay attention to. There's a lot to be mindful of. BK traders we're already in, a couple of trades. We went short this morning, this Euro Aussie trade here, and I'll talk about the reason why, but we had 2 double zip sell signal. We laid on a swing trade to short this. We're still in the trade. We also went short Euro Yen, which is basically flat right now. Not sure if it's really the best trade, but we're in this trade. Euro Aussie has already closed half of the position, and we're going to ride it lower. A lot of this is based upon one of the most important event risks this week, which is the European Central Bank's rate decision. The ECB is expected to lower interest rates for the first time since 2019. Right behind the Swiss National Bank, they will be the next major central bank to cut interest rates. Of course, if the Bank of Canada doesn't preempt them first and come in and lower interest rates on Wednesday. and we will talk about both. But BK traders are short euros this morning off of our zip sell signals because the ECB will be taking the monumental step of lowering interest rates for the first time since 2019. So we'll go through this heat map. We'll go through the what we expect for the central bank rate decisions. We'll go through the economic data and the calendar. But let's first start off with talking about the US dollar. The US dollar is mixed this morning. It is slightly lower, I would say, against most of the major currencies. If you take a look here, let's look at this on the right-hand side. You will see that the dollar is mixed. It actually now is slightly higher against the euro, sterling lower against yen, Swiss basically mixed. And this week, the next 2 weeks in many ways are probably the most important weeks for the dollar until September, starting off with the ISMs and then the non-farm payrolls report on Friday, because the market gets convinced nothing's happening this month from the Federal Reserve. And the Federal Reserve right now is in their quiet period, which means that we heard a lot from central bankers over the past couple of weeks. They have all been mostly dovish, mostly hawkish, meaning that they've been resisting a talk about interest rate cuts. And that has helped, dollar yen reach as high as its pre-intervention levels. It, euro dollar is kind of trapped in a range, but it's basically helped dollar yen sustain its gains. But there's a lot of vulnerabilities in the U.S. economy, and everyone is certain they're going to leave interest rates unchanged in June. But will the Federal Reserve cut in September, or will it be later this year? The Federal Reserve is obviously not in focus as much as they will be later when we get to the next central bank meeting. But non-farm payrolls is at the end of the week. It's going to be very, very impactful because there are going to be 2 non-farm payrolls report until the September meeting. I have not talked about the yen. You're coming right at the right time. We're just beginning. So for the US dollar, non-farm payrolls are expected to be slightly stronger. It will very much, the dollar, because non-farm payroll is not due till the end of the week, will trade more on what's going on, like in the euro, the ECB meeting, the Bank of Canada meeting. But for the most part, there is a tug of war, and there continues to be a tug of war between what data is showing us, which is mostly weakness, and then also what central bankers are telling us, which is they don't really want to cut interest rates yet. So the ISMs, which are basically the most up-to-date pieces of data, will give us a really good look as to whether that slowdown has continued. We already see that U.S. yields, and I apologize for flipping back and forth, but we already see that U.S. yields are lower today. So dollar yen, no surprise, is lower. And for those of you that are joining us for the very first time, we always like to look at the relationship between dollar yen, which is the candlesticks, and the and U.S. Treasury yields. That is basically, let me move this to the left scale. Dollar yen, and most of the dollar instruments take its cue from Treasury yields. So if Treasury yields today are down, if they fall further, we could see a more meaningful slide in dollar yen. And as I said earlier when we kicked off the session, sorry about that. As I said earlier when we kicked off the session, BK traders are in 2 trades this morning, and I'll show you right now. We are short Euro Aussie, which has already we've already taken off a small we've already taken off the first half of the position, and we're also short Euro Yen right around current levels. We had a double zip sell signal in Euro Aussie, Euro Yen. If we look here, we also had a zip sell signal at the time when it took the snapshot. It did not fully form a zip sell, but it was looking pretty weak. And then the reasons why. The reasons are because the ECB is expected to deliver the first rate cut since 2019. We'll talk about that some more. But going back to the US dollar, US yields are very important. And if US yields continue to come down, that's going to drag down Euro Yen as well. So when we select trades, one of the things that we look for is, what are the equity markets doing? They were actually lower this morning. Now they're flat. What are yields doing? They're actually lower. And so that is negative for Euro Yen, and the equity market movement, it's flat. It doesn't really affect Euro Yen as much. But this is a week where, the market is looking for slightly stronger non-farm payrolls. But if you look at today's ISM forecast, ISM is expected to be stronger. And then later on in the week, when we look at the calendar later, services ISM is also expected to be steady. So if we get good manufacturing ISM, which may or may not happen, we get good service sector ISM and good NFPs, that could be very positive for the dollar, but it's going to be high bar because everything that we've heard so far is the U.S. economy is slowing. So my bottom line is what I'm trying to say is that non-farm payroll is going to be very, very significant for determining the market's direction for the dollar in the next month. And so that is why it's really, this next 2 weeks is going to really be the most important weeks for the dollar, for U.S. markets until September. But NFPs at the end of the week, we have ECB first. And right now, this says bearish ECB. I showed you that how I went short Euro, Yen, Euro, Aussie. Euro, Aussie is in profit already. Euro, Yen is pretty much where we got in. ECB is expected to cut interest rates for the first time since 2019. But I want to show you this. Let me get this back into this monitor. I want to show you this table that basically shows how the Eurozone economy has changed from the last meeting. So basically, since the last meeting, which was on April 11th, you can see at first glance, you tell me how the Eurozone economy has done since the last meeting. A sea of green, bullish, 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 bullish. The retail sales isn't great. It's still negative, but at least it dropped less than the previous month in Germany. Eurozone retail sales turned positive. We skip over to labor market conditions, fewer job losses in Germany. Unemployment rate held steady in Germany. Eurozone unemployment rate improved. Inflationary measures, the consumer prices, which is what everyone focuses on. CPI accelerated in April in Germany. CPI accelerated in May in the Eurozone. And then we skip down to business activity. Trade activity in Germany improved. PMIs improved in the Eurozone. In Germany, the ZU is up, the IFO is up, and the DAX is up, and the German 10-year bond yield is up. So I always like to say, when we are trading central bank rate decisions, what you should be doing is putting yourself into the shoes of the central bank. Based upon this, what do you think the ECB should do? I'm sure many of you looking at this like, why is the ECB lowering interest rates? If the economy improved since the last meeting, they're really, they should be keeping rates steady and skipping and waiting another month like the Federal Reserve, right? Maybe. But the ECB is one of those central banks that if they're telling you that they're going to do something, then you better believe it. They're going to be doing it. So the ECB is not a central bank you want to fade. They are not going to come out and kind of psych you out. If they say they're cutting interest rates in June and they want to do it, which is what pretty much every single European central bank official have said, you better bet they are going to do that. So, but the market's already completely priced that in, and the euro's not really lower. So the question really is what happens next? And that's what everyone is thinking forward to. Benny said, where did you get this spreadsheet? I made it, Benny. I made this spreadsheet. And this is how I do this for some of the major central bank meetings. This is how I put myself into the shoes of the central bank. Because, what does the central bank look at? How the economy, how's inflation changed? And that is what we all should be looking at. So we know they're telling us very clearly they plan to lower interest rates in June. And the market's pretty much completely priced in a June interest rate cut. But no one is really talking about what happens next yet. And based upon this, what do you think the ECB's guidance will be? Well, based upon this, it suggests that the ECB could say one and done, right? I don't know if they're going to be so bold as to say one and done, but I am certain they will say that future rate cuts are data dependent. I am pretty sure they're going to leave the market guessing on the next move. I'm pretty sure they're not going to commit to additional easing. So if they cut interest rates and they step back and say, yeah, you know, we cut interest rates, but I don't know if we're going to do another one. That is not euro bearish. That is euro bullish, because market wants to see not just one, they want to see one and more, especially when they've already priced in one. And what's really cool is that I'm hoping my YouTube guys can do it quickly, but this, at the end of this week, my next YouTube video is going to be how the experts calculate the probability of interest rate changes. And we get really deep into how they do this. So, that's basically, so taking a look at this, the way to trade, in my opinion, the euro is, first of all, the euro itself has not fully priced in, the euro itself has not fully reflected, in my opinion, the interest rate cut. So I think that the euro is probably going to sell off. Right now it's in the buy zone, so obviously not great here. We're going to look at this chart here. I'm going to remove the 10-year yield. Euro, first of all, I think is going to have no real upside before the ECB meeting. And I think that it's probably going to drip lower as traders come to the reality that this is going to be the first interest rate cut by the ECB since 2019. But right before the ECB rate decision, we should all be flat. Maybe some of you would be bold enough to take a long position, because based upon this table here, you can see that all of the arguments basically favor the ECB sounding wishy-washy. Maybe the ECB says just say one and done. The ECB certainly not setting the stage for a series of interest rate cuts to come, that they're going to back off. They're going to say everything's data dependent. The market's going to interpret this possibly as euro bullish. So that is why right now I'm bearish euros going into the ECB rate decision. But after the ECB rate decision, or right before it, I think that we're going to see the euro. We could see the euro rally. I'm bearish pounds. We'll get to the Bank of Canada in just a second. But I'm bearish pounds, and the reason why I'm bearish pounds is because recent UK data hasn't been great, and this is not a week for the UK. We have nothing really going on in the UK calendar, so I think sterling could probably underperform. We're not, we don't really actively trade sterling, but because the spreads require a larger stop than I like to have. But I think, sterling will probably underperform, especially if the ECB ends up being less dovish. Aussie, I'm neutral bullish. So here's the huge thing that's going on with the Aussie. First off, how is Aussie doing right now? It should be up a little bit. Yeah, I really, really like the Aussie, which is why I am short Euro Aussie. I really like being long Aussies. And the reason for that is, number one, last time we had the RBA meeting, they talked about a rate hike. Now, of course, everyone knows that they're not serious about raising interest rates, but the fact that they're thinking about rate hikes and not rate cuts is positive for the currency. Secondly, most importantly, one of the big stories is that, let's Google this. I love, trusty Google, Australia wage. One of the really big stories was that Australia overnight lifted its minimum wage by 3.75%. So they lifted the minimum wage by 3.75%. And in July, tax cuts are expected to come. All of this is positive fiscal stimulus, meaning that it's going to boost the economy, right? If you think, your minimum wages are increasing and you're getting tax cuts, you're going to feel a little bit better about spending. And actually minimum wage is really high. If you look at here, minimum wage is $23.23 an hour, Aussies. And, so that's really high. But Bloomberg says that it helps in their inflation fight because, Australians are making more, so they, can, afford to that it's kind of offsetting the rise in inflation. But oftentimes businesses raise prices or adjust prices with the lag. They want to see how consumers behave first. So I think that this is going to make the inflation fight tougher in the near term because it's, maybe they won't lower prices. Maybe they'll keep prices high. Maybe I think, but I certainly think that the tax cuts and all of this boost is positive for the Australian dollar. So I'm neutral bullish Aussies. I'm bearish the Canadian dollar. Let's talk about the Bank of Canada rate decision. This is a huge week for Canada. Aside from the Bank of Canada rate decision on Wednesday, we also have IVPMI and we also have the jobs report. The jobs report is due at the end of the week. So the market is pricing in, believe it or not, an 80% chance of a interest rate cut by the Bank of Canada. Last week it was 60, and then we had the GDP number and the inflation number come out, and it notched up to 80. So the Canadian dollar is certainly not pricing this in yet. Investors are not fully pricing in the anticipation of a rate cut by the Bank of Canada. So that creates an opportunity for us. So we could be selling CAD going into the BoC rate decision and maybe even out of it. So let's put ourselves into the shoes of central bank. The Canadian central bank rate decisions adjusted a lot in a very short period of time because we have seen a lot more mixed data. Now, just at a glance, certainly if you look at this table and you see this, red, green, black, it definitely has a stronger case for a rate cut than this, right? Green, 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 and green down across the board for the Eurozone. But we talked about that already. For Canada, the retail sales numbers were, the March numbers dropped less than the previous month, but still this is pretty bearish. This is the second month that we've seen consumer demand contract. So bad news, certainly reflects weakness rather than strength in Canada's economy. Labor market, not bad. I mean, net change in employment, this is a huge number, 90,000. Unemployment rate held steady. On Friday, we also get the jobs report from Canada. And that is also, and that actually, there's no way they're going to match this 90,000 or get anywhere close to it. So that's probably going to be weaker. But that comes after the Bank of Canada rate decision. So it'll probably be a little less market moving. Then we have the inflation numbers. The inflation numbers is where we kind of have trouble. The monthly number is a little stronger, but the weekly number shows inflation easing 2.8% to 2.7%. Building permits numbers, housing market is weaker. Activity indicators, GDP numbers are stronger. IV stronger. Trade turned negative, really bad news. And even though the stock market is pretty much where it was before. It's pretty much unchanged. 22,200, 22,269 is pretty much unchanged. But yields are lower and oil prices are quite a bit lower. So, the Bank of Canada, they certainly do not have the momentum as the U.S. economy, and certainly not the sea of greed that we're seeing for the Eurozone economy either. So all of this is basically, kind of increases the argument a bit for a interest rate cut for the Canadians. And so if they wanted to, they certainly could. Inflation is moving lower. It's going to be a close call, but the market thinks that they are underestimating a rate cut, and so therefore the loonie should be trading lower, especially since oil prices are a bit lower. Kiwi is it still the case? Kiwi is, yes, hands down the best performing currency, up 0.25% this morning. It's doing really, really well. And RBNZ, like the RBA, is talking about rate hikes, even though we all know they're not serious. But the data from New Zealand has been very, very good. So that has allowed Kiwi to lead the rally. And we're still bullish Kiwis. We don't have much in the way of New Zealand data this week to really set back the Kiwi. We do have some, like a little bit of quarterly trade data on Tuesday, but not a huge market mover. Now, some of you asking, why am I bullish Swiss franc? I'm bullish Swiss franc is because we've had nothing but back-to-back improvements in Swiss data since the last SMB meeting. Inflation, if you look at this, you click on this, this actually expands. It says improvements in retail sales, inflation, unemployment, and confidence. All of these numbers have improved, which is why the Swiss franc has been outperforming, because they cut interest rates and there's been a whole bunch of improvements in data, which suggests that maybe they do not need more rate cuts yet. Now, the market still thinks that they're going to cut interest rates, but maybe not quite so soon. This heat map is available to all BK traders. And then the yen and neutral Japanese yen, although we're beginning to see, this is the first month, I believe, that dollar yen has fallen in the past 5 months. Not much, but the first month it's fallen. So I like the yen is starting to rally. At the end of May, we saw that Japan basically spent 10 trillion yen on intervention, the largest amount, much larger than the previous month. Pretty big deal there. And, it's important. And, that is something that, that could finally lead to a bit of a rally in the Japanese yen. So that's the outlook of the heat map in a nutshell. Let's dive a little deeper into the economic reports. So, okay, we've had the PMIs from Australia, a little downward revision, which is why Aussie is underperforming Kiwi today. But the Chinese data was good. Inflation gauge was higher. We had that minimum wage increase. All of that is positive for Aussie. And then today we have the Swiss PMI. So this is another reason why, you're asking me, why am I bullish Swiss francs? Just back-to-back improvements in Swiss data. And, I am bullish Swiss francs because Swiss PMIs were also stronger this morning. So, all of this tells me that, Swiss franc should be stronger. We had revisions to Eurozone PMIs, which, the Eurozone numbers revised slightly lower, the UK number slightly lower, but not much more. Later on today, we have ISM manufacturing data. As I said, if those of you that joined us late, this is the most important week. The next 2 weeks for the dollar is the most important weeks until September. And it starts with the ISMs and it goes to NFPs, because the ISMs are the most up-to-date indicators that we get for the economy. And so the economists are looking for a stronger number, but Empire State and Philly Fed were weaker. So I don't, I'm not sure if it's really going to be as strong as they think. But anyway, we'll see. So the ISM numbers are coming out. I think that the risk is to the downside, but if it's good, obviously the dollar will rally. Maybe the more significant gains will be against the euro. Tonight we have Australian contribution to GDP. These are not really all that market moving. Tomorrow on Tuesday, we have the Swiss inflation rates. This is also another big week for Switzerland. And the market is looking for, once again, a hotter inflation number from Switzerland. So, if it's hotter, then that is another reason to be long Swiss francs. We have the German labor market numbers. Unemployment change expected to be pretty much the same, but that's an important number. Inflation expectations from the Eurozone. US has factory orders numbers, a little bit of deterioration there. And then in the evening time, we have some new PMIs from Australia, which will be important. And we have Australian GDP numbers. This will be very, very important. And with Australian GDP numbers, economists are looking for the GDP growth rate pretty much to hold steady. We did have weaker retail sales, weaker trade data from Australia, but the retail sales number has been good. So, I wouldn't rule out an upside surprise. We also have earnings data from Japan. That's expected to be hot. If it is hot, it's positive for the yen. And then on Wednesday, that's when we get to our rate decisions. But first, we have more revisions to PMIs, not really that interesting. Everyone be focused on ADP for the US, which is a leading indicator for non-farm payrolls, as well as the Bank of Canada rate decision. So as you can see, market, the economists for the most part have now moved to the 80% chance of a quarter-point cut. And if you look at this table, we could get a quarter-point cut because there's a mixture There's a lot of reasons to be bearish and bullish. The Canadian dollar, that their guidance could be dovish, that they could cut and say more could come. And that is something that's going to be very, very important tomorrow. And then after that, we have Australian trade data. Interesting, but not a huge market mover. And then on Thursday, which is the 6th, let's scroll down to the 6th. Oh, so we have Bank of Canada rate decision. We have ISM services from the US, which is very, very important leading indicator for NFPs. Once these numbers are released, ISM manufacturing, ADP, and ISM services, I'm going to do my arguments for and against a stronger interest rate cut, for and against a stronger NFP report on Friday. So definitely follow my Twitter feed. I will be posting it there. And on Thursdays, when we get the ECB rate decision. As I said earlier, ECB expected to cut interest rates 4.5% to 4.25%. This is pretty much expected to be a done deal. But look here, bullish, 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 a sea of bullishness, which basically tells us that the ECB could cut interest rates. They're almost certainly going to say that another rate cut beyond that is data dependent, and therefore it may end up being bullish euros. If they have any suggestion that they're one and done, or they're not necessarily thinking about doing more, that is going to be bullish euros. But leading into the ECB rate decision, I'm short euros, we're short euro Aussie, and we're also short, euro yen, trying to capitalize on a little bit of movement before the ECB rate decision. But morning of the ECB rate decision, night before the ECB rate decision, we won't be in any euro trades at all. Trade data from Canada, that's going to take a back seat to the Bank of Canada rate decision. The ECB press conference will be much more important than the ECB rate decision. This rate decision, the ECB will provide their economic projections as well. And chances are they're probably going to downgrade their inflation forecast, but they could upgrade some of their other assessments. So keep an eye out for that. Could also lift the euro a bit. Chinese trade data Thursday evening, and then Friday, it's all about jobs. Yes, we've got German trade. No one's really going to care about that. We have revisions to Eurozone GDP. No one's going to care about that either. The focus will be on Canadian and US jobs. Canada, we had a huge blowout month before, 90,000. Definitely not going to match that number. We're looking for weaker job growth, CAD negative numbers. But maybe it could be 50. We'll see. IV PMI is also coming out this week. That will be on Thursday. The employment component of IV PMI will help us get a sense of how the labor market activity will fare. Non-farm payrolls are expected to grow at a greater pace than the previous month. The wages are expected to be positive. This is expected to be dollar positive. We'll see. Jobless claims have been very low. Fed has been less dovish, so there's many reasons for it to be good. This will be a very, very important NFP number. That is why it's always best to trade NFPs reactively, not proactively. We may live trade NFPs on Friday. I'm not sure. But if we do, I'll let you know. And we'll definitely post it on our Twitter feeds. Okay, so now you've got that. Now let's look at the charts. So taking a look at the charts, euro is going into daily chart, is above all the major moving averages. It's still bullish. So we could get a pullback in the euro, but it may be a shallow pullback. I don't really expect, unless the ECB surprises and indicates that more is to come, and that they think they need to get tougher on interest rate cuts. I think this 107.50 level is going to hold, and so we're just capturing a little bit of downside in anticipation of that. Sterling is not doing anything. There's no major UK economic reports this week. It's going to trade on US dollar flows. We'll have to see how ISM fares. If ISM is good, sterling could roll over and tip down to 126.50. Resistance up at 128. Dollar yen, I think it's going to roll over. We need some weaker data for it to really pull back. But if we get a weaker ISM number, I think we're going to take out this low. We need to take out this low here, which is pretty much where the 20 SMA at 156.29. We'll just put it to 25. If it breaks below 156.25, then we're going to see a much more significant move lower. But before it breaks that, maybe you can dip a little bit to the downside, but there really is no trade on the short side until we break below that point. Dollar Swiss, on the other hand, has been very, very weak. And I think it'll remain weak. We're bullish Swiss francs. I think it could touch the 100 SMA at 89.40. And if we look at our fibs here, this confluence of the 200 SMA and this fib level is really the level to watch for. It's just a terribly drawn fib. Is really the level to watch for dollar Swiss, but let's see if there's a more significant one. I mean, pretty much right around the same levels, which basically tells you how important that level is. Aussie, I'm bullish Aussies. We outlined how minimum wage increased. They're getting tax cuts coming. I think Aussie will continue to outperform, but of course, this week is a week not about us Aussie, but about US dollar. So we can't ignore the fact that Aussie is going to trade on US dollar flows, but that's what I'm looking for. Kiwi, still bullish Kiwis, but once again, it's going to be based upon Aussie dollar flows and nothing else. But Kiwi is looking very bullish. If we get weak non-farm payrolls, we're going to see some nice gains in Kiwi. And as for the Bank of Canada rate decision, as I said, BoC is expected to cut interest rates by 25 basis points. CAD is strong. It is not pricing in the rate cut. I think that the rally in the CAD will be limited until Wednesday. I think that we should be looking for opportunities to sell the CAD. Maybe not so much against dollar, but we'll have to see if some other interesting opportunities come up. You don't have that in, I'll be watching the zips. Definitely Aussie CAD, Kiwi CAD seem to be the trades, but they're also very overstretched. You can see here, maybe CAD Yen could be an interesting downside trade, but I do like selling CAD. CAD Yen, CAD Swiss are probably the ones that are least overextended. As for gold, gold is just kind of trading this range. It's the bottom of the range. In terms of gold, the levels to watch for gold is really, we've got a little bit of support over here, and then 2280 below that. We have lower highs, lower lows. I think it could drip lower, but everyone is hinging upon dollar flows. All right, so Boris is not in our live stream today, although he'll be live trading with our members. I want to open up the floor, any questions you may have. I talked about why I'm bullish with franc. The Bank of Canada is expected to be dovish. The yen, I think, we don't have much going on for the yen this week. It's going to be all based upon, NFPs, ISMs. That's going to determine how yields are moving, which is going to determine how dollar yen is moving, which is going to determine how the yen pairs are moving as well. Za asked, was there any incident in the history of central bank rate cut and they raised again due to inflation? Yes, of course, there's been history of them cutting and then raising again, not immediately, although the Bank of England is a little bit more dynamic, but we are not in that phase right now. How do you determine when a decision is priced in or not? I have a whole video on that I worked on this weekend that we're publishing at the end of this week. So definitely look out on that, on exactly how it's calculated and where you can find that information. And for many of you are, and I love how all of you are so interested in learning more about fundamentals. I have a course on fundamentals that covers a lot of this stuff that I'm going to drop the link for. So make sure you check that out if you want to learn to trade more fundamentals. Also, Apex, their 90% off offer is ending today. So it ends at midnight today. So if you want to save 90% on your futures prop trading account, make sure you hit that link as well. Any more questions about this? If not, we may live trade NFPs on Friday. I'll let you know. I'm going to be posting a lot of videos about ECB, BoC, some interesting shorts this week. So definitely stay subscribed to the channel if you don't do so already, because it's a big week. There's lots to talk about, and I definitely want to share my thoughts with you. Also, June tends to be a very weak month for stocks. I don't have the charts on this computer, but I showed you last week how the sell in May should really be sell in June and go away. And so I'm going to do a short on that as well and post it on our channels. Make sure you subscribe to our channel for updates on those shorts that I'm going to pump out this week. Otherwise, if there are no further questions, thank you all for joining me today, and I wish you all a great trading week.